Hello and welcome to today's NinjaTrader Ecosystem webinar event with Chris Tubby of Master Consulting. My name is Tiffany and I'm a platform representative at NinjaTrader. Today's webinar is interactive, so if you would like to ask questions during the presentation, please open the chat window now. You can open the chat by moving your mouse to the bottom of the Zoom window and pressing the chat icon. Once you have the chat window enabled, I'd like a test for audio and visual so you can hear my voice and see the projection in the room. Please type Y in the chat now. Thank you for confirming that. Again, we have a very special event with you today with Chris Tubby of Master Consulting. But before we get started, I'd like to place a poll into the room. While you fill that out, I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and can even incur losses beyond these amounts. Please inquire at the link provided. For more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage directly at the information provided. Thank you all for filling out that poll. The question is, what initially brought you to the NinjaTrader ecosystem site? It appears that 12% of you are searching for trading apps and add-ons. 66% of you are looking for trading education, 4% of you are looking for programming assistance, and 18% of you are joining for first-time live webinar. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive at the view recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader ecosystem on social media. I have attached both the Twitter as well as the Facebook in the chat. The NinjaTrader is always free for advanced charting, strategy, backtesting, and trade simulation. To ensure you are in the latest version of NinjaTrader and pick up a free live trial, please visit the following link. You could purchase or lease NinjaTrader at the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. Again, we are very excited for this unique event in which Chris will demonstrate mistakes new traders make often. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Chris. Please take it away, Chris. Chris, you're just going to have to push share screen in order to share your screen and then open that chat window.
I'm just there. Sorry guys, I'll be with you in a moment. Okay, I think I'm there. Tiffany, can you confirm that panelists and attendees are okay?
Looks great to me. I can see your PowerPoint and you're coming in loud and clear.
Okay, great. Thank you.
Absolutely.
So hi guys, welcome to Master Consulting. This webinar sort of exposes some of the mistakes that new traders make. Plus I've added on creating a trading plan and maintaining a trading diary as well. So here we go. So I'm a leading trader educator, and I've got over 4 decades of trading experience, and that's across all the asset classes. So mainly as a prop trader, but with some arbitrage, and I've done plenty of market making for the major exchanges as well. So I've been trading a long time. My career started in commodities in the 70s. Before I moved into the financial markets when they arrived in London in '82. And I was fortunate enough to become a senior trader by the age of 22. My main market making, liquidity providing was to both the major energy exchanges. And I also spent 4 years in Italy as a market maker for an Italian bank. All right, don't want to go that fast yet. So I also consulted to the London Stock Exchange Group, and you'll find my LinkedIn profile around, so it's just down there. So if you're interested in checking me out, feel free. So this webinar will highlight mistakes that new traders make, as well as some of the old ones actually. And plus I've added some elements to how to build a trading plan and maintaining that trading diary. I offer videos, workshops, courses, flexi courses, and an extensive textbook to assist you on your journey in becoming a trader. So the first thing is to consider when entering the world of trading is how much are you willing to invest in yourself to become a trader? And this is as you would in any business. Once you've decided that number, don't break it. You know, it's there for a reason. And I think that once you've decided on that number, because trading is not for everyone, and therefore it's important to control that investment. A simple error many traders make is running losses and cutting profits, which leads to a very short career. This occurs generally from a poor performance, lacking a solid risk-reward ratio, which in turn impacts your winners to losers ratio, and then eventually it becomes unobtainable. Another area of that is the lack of research, a major difference between trading and gambling, I believe. So researching and understanding the fundamentals that impact your product are essential, as they're going to dictate the trend and the volatility. A lack of discipline will lead to a short career. We're all wrong at times. Sometimes our ego gets in the way, but we need to control those trades and limit those losses. And that also includes no stop loss or moving it as the market nears that price. And I've seen that done many times. Another is not calculating your risk reward ratio, and therefore you have no idea where to place your stop loss. Rushing into trades is another one, and that can result just from impatience or again, just not having a trading plan. Or the very dangerous one is revenge trading, where you're just chasing losses. Here it's important just to wait until the market provides another clear signal that meets all your rules, and this should result in a highly probability trade. Avoid leverage if you can, just risk the capital that you can afford to lose. And if you're trading too many products, then again, that can be an issue. Sorry, just lost myself for a moment. And when you're trading too many products, then it makes it more difficult for you. So again, that's just from years of experience. Sorry, I just got to move to chat. Can't actually see my slides. And over trading comes from no trading plan, poor risk reward. Confidence is another major factor. If you've got that lack of confidence due to poor results, it can make you overcautious. You can get a bit concerned about clicking that button. And if you're fearful of losing money, then it makes it more challenging to actually make money. Overconfidence has a similar impact. You feel invincible, and obviously you're not. And you perhaps enter a trade with your maximum size, possibly just without following your trading plan. And then this is usually when you have one of your biggest losses, and it reminds you just how vulnerable we are, because at the end of the day, it's the markets that we have to respect. So another area is when you're rushing into trade live, which again is something you don't want to do, and it's without really planning all the steps. So you've been practicing and you feel ready. You've had one or two good days, but that doesn't necessarily mean that you're ready in reality. And psychologically, it changes very much as well. So just because you think you've had a few good days that you're ready, perhaps you're not, and you really need to really think about that part. And there's many parts to trading, and practice is essential to master the skills of trading. However, no amount of practice can prepare you for those early trading days. Trading on a sim just doesn't have any consequences. So you're trading away. You in your mind you think it's live, and you want to treat it as live, but that's not really the case, and it's impossible. It's only when you actually go live that you realize that as well. And even bank traders struggle to make that transition. So underfunding is another crucial part in preparing for trading, and that's because you have to ensure that you have sufficient funds available to actually trade. And it's common to lose in the early stages, sometimes not very much. Again, it's just a matter of if you've got those controls over your risk, which you need to have. But a result of trading live definitely triggers your emotions, and you think again that it's doing that when you're on a sim, but it's not really. I also believe it's preferable to have a steady income while you're honing your trading skills on the sim. And even in the early stages of trading, when you're going live, the reason for that is just because it removes some of that financial pressure. The worst thing is to actually need to make money. Wanting to make money is fine, but needing to make money puts you under too much financial pressure in the early stages. And you're chasing trades that aren't really good trades. You've got to go for those high probability trades. So that's too much pressure for many, and that's why many traders fail in the early stages. Another thing I find is setting targets. So I think with that, what happens is that again, it puts you under too much pressure. Again, you take those higher risk trades on, you start over trading because you're desperate to achieve those targets. It's much better just to wait and be patient. calculating your trading costs, your personal costs, and anything you need to cover. And then adding a percentage on that is going to give you an idea of, you know, not a target. I don't like targets. I think that's a terrible word. Maybe goals or an idea of what you need to cover your expenses. And the idea is to look to build consistency. And a good way to assess your progress, I would say, in the early stages is just look to have an overall improvement on your profit month on month. And then that just sort of keeps you much more on an even keel. And because that leverage is something to be cautious of, you know, it's great when you win, but it's horrendous when you lose. It can be life-changing, so you really need to be careful there. And again, you know, there's not enough emphasis from myself as an educator or from Ninja Trader that you should only risk that capital that you can afford to lose. Otherwise, just wait and save. Make sure that you're comfortable and you're ready. Don't rush into this trading. Practice, practice, practice. So a few things I just want to highlight here if you are trading remotely, electronically, and they're really about if you, for some reason, lose connectivity. And it's something that you don't really think about until it happens. So there's important information to have at hand just in case. And that includes your broker's phone number and your account details. And again, if you lose your connectivity, you should call your broker as soon as possible. So check what orders he can see that you're working, if any, and cancel them if you don't need them, because you don't have control of your position, basically. Check the last trade that you did and what your current position is with that broker as well. And if you have a position, give him any orders that you need to control that so that you've got an OCO in or something, but that you can protect yourself there. And finally, check why you lost connection in case you need to improve something to prevent it from happening again. Now I'm going to move on to a trading plan. And basically, this is creating a trading plan. And this is, again, what helps you to get that consistency. So, you know, what is it? And all it is really is just a set of rules that you're going to follow to keep you in control and keep you disciplined. Now, remember to decide the maximum you're going to invest in yourself to become a trader. And if you reach it, stop. You can always try again in the future. And by that, I probably mean a year or two. In the meantime, you know, go back on the sim and practice, practice, and practice. Now, I believe that there's two parts to a trading plan. One's the financial aspect, and the other one is the trading rules. So I would say financially, you should ensure that you have sufficient capital to match your aspirations, as we'll only trade with the money that you can afford to lose. Decide the maximum drawdown that you're going to take, the maximum loss that you would be willing to or could afford to take on a daily basis. That's if you're going to trade daily. Obviously, you can adjust it if you're going to trade weekly or monthly. It really depends how frequently you're going to. But you must work with the capital that you have available. And again, you know, stop if you have a certain amount of losing consecutive trades to work out what is going wrong. You know, when you're having those good days, you want to make sure that you at least lock in some of that profit and you keep that. And another area, I think, is to make sure that you calculate your risk reward before entering any trade. For me, my minimum is 2 to 1, but it's different for everybody. And trading is so personal. It's all about you and your character. You have to work out what's right for you when it comes to trading. So when it comes to the trading setup, first of all, have you planned your day? Have you carried out your research, your analysis? And then really you should ask yourself, am I mentally ready to trade today? And that is very important. Your psyche, your emotions, they account for probably about 80% of your trading decisions. You've got to try and keep that under control. So asking yourself if you're ready to trade is a very important question. And then you've got to say to yourself, I will only trade high probability trades. And that is when the market provides me with a clear signal and not gamble. And I must refrain from those impulsive trades, which we're all tempted to do from time to time. And it's really important to take breaks from your screen regularly during the day. We all want to watch the market, but it's exhausting actually if you watch it every single moment of each day. And you've got to ensure that your stop loss is in the market if you have a position, especially if you're going to walk away from your screens. Now, my stop losses will always be set in the market, and I do not revenge trade. For me, I always just think there's going to be another trade or tomorrow's another day. I will, however, lock in profits, and that is something that's important because you need to have the good days and just to cover any bad days or any bad trades. So it's important to do that and make sure that you've actually locked in some money on the good days. And just set a level after which, if you break through that the first trade after that, you'll say to yourself, okay, I've probably had enough today now. I've had a good day. I don't want to destroy that. I want to walk out with some good money today, and just give yourself a pat on the back and be happy that you've managed that. So another thing that I focus on is the process, and I recommend to the people that I train the same. Just focus on the process. Just focus on improving your discipline, your patience, and again, invest in any free time that you have in continuing to learn and improve. And it's all about quality over quantity, and just setting a maximum limit for perhaps the number of trades that you will do in a day, because that again will make you more selective when it comes to trading. So I have created a template, which is a trading diary, just to give you an idea of what you can put together. So quite simply here, we've got the date, because it's obviously good to know what days you have good ones and maybe not so good. And although you can just customize this to however you want to create it, just do it in an Excel sheet. It doesn't take very long. And of course, it's great to keep all your data in there, because it's much easier to crunch those numbers when it's already set in one place. And if you do it regularly, it saves also, all of a sudden it becomes a task and a chore. Whereas if you do it daily, it's very useful. So the first thing that I suggest filling in is your confidence level for the day. When you're going to sit down, you feel ready to trade, you've gone through all your rules, you've gone through all your processes and all that. Just think about it, sort of, how do I feel about my trading today? And then, you can put a number in there. I've got my own rules on where I think it should be, but I'm not potentially probably going to share that with you at this precise moment. And of course, with the date as well. And then the rest of the sections you would fill in as you go through the day. In the top part, probably you'd have to do them at the end of the day. And then to the right, you can actually add your support and resistance levels as little reminders, because quite often we can analyze charts, but sometimes we just get distracted or we actually forget those levels. So it's quite good as a reminder. And again, where it's got key levels, you could change that to times of data. So you could actually put the data in there as well for reminders of when that's coming out, because, you know, again, you've got to be very cautious over data. Having positions just before data, I consider gambling, not really trading. Now, the bottom section is really where you would put all your list of trades. So the contract you're trading and the time that you traded, which is all very relevant. The opening price, so the price that you actually traded at. Also, what was your target price and where was your stop loss set? Then after that, the actual price that you exited the trade and the result of that. And then there's that horrible column for that little comment of why you did that trade and why did you get out. And then at the end of it, I've just put this little column where you just put an arrow 5 minutes after you've closed the position, which is just, you can just write in there up, down or sideways. But that can help you with your analysis of basically if you're taking profits too early or you've got stop losses too close or too far away, those types of things. So it's quite basic, but it is quite useful. And, you know, the thing with that is if it's one odd trade, it's not really an issue. But if you find that when you're analysing a month or 3 months of data, that it becomes a regular thing that you're taking your profits too early because, you know, you've bought it, the market's gone up, you've sold out, and then by the side constantly you're seeing up arrows. It doesn't mean that you shouldn't take some profit there, but it just means that perhaps you just think, overall, where am I going with this? Because I'm being too impulsive with taking those profits. But I would say there's never anything wrong with taking a profit, for sure. So I would just like to thank you for allowing me to share some of my 4 decades of knowledge with you. If you would like to expand your knowledge any further, then please check out my website. It'll be on the back, but otherwise it's masterc.co.uk. I provide workshops, courses, flexi courses where basically you can do odd days rather than do it all in one go. And I have videos and a very comprehensive ebook, which is called Master Trading. Details for the contact are on the final slide. Details for everything else you will find on the website. So as usual, our disclaimers. So it's important not to, it's boring, yes, I know, but again, very, very important. So trading involves the risk of the loss of capital, which could be higher than your initial investment. You know, these markets have been very volatile in recent months. Trading is not suitable for everyone, and so therefore it's very important to be wary of leverage, as again you can lose considerably more than your initial investment. I'd like to point out that all the views and the information provided are my personal views, and of course we're only providing this for educational purposes, just to try and help you on your journey, and it does not constitute investment advice or a solicitation to trade or invest. Before you trade, you should carefully consider the inherent risks of trading, your financial situation, your investment objectives, definitely your level of experience, and also be cautious of your risk appetite. And you should only risk capital that you are prepared, but more importantly, can afford to lose. It's imperative you seek advice from an independent financial advisor if you have any doubts whatsoever before you risk your capital. You know, don't start trading and then regret it. Think about all this before you start, and, you know, treat it as a business. So here is my website and contact details, or it was, and I look forward to any feedback from you, good or bad. And now, of course, I'm ready for the the chat and for any questions that you may have.
Those questions are going to be found in the chat window, and you may need to scroll up in order to see all of them.
Okay, I'm just answering the odd ones as I get a chance. So can I just talk the answers, or do I have to type them?
You are absolutely welcome to verbally answer those questions.
Oh, okay, because my typing's probably not the fastest for sure. Hi, Marie. So you asked me basically about how much to use as an investment. It's the same for everybody. It really depends on your personal circumstances. But the thing is to think about it very hard first, and friends, family, just discuss it before you get involved. Or if you know anyone with experience, talk to them first as well. It's not something that you should definitely rush into. Got so many questions. So did I ever trade my own money? I've been trading my own money for the last 36 years. Before that, I worked for companies for 10 years. So that gave me a very good foundation before actually going in and preparing myself for trading my own money. How to prevent taking profits too early. Use your technical analysis. Just work really hard at honing that. If you're using technicals, then just really study over the weekends, do a load of back testing, what if scenarios, because that's all very helpful. And it depends how much size you've got on, because if you've got enough size, then you can feed in so that you lock in some profit, but you hold some of the position back for if it does go further. With all of this, it's all trial and error, but what you're looking for is something that works for you more often than it doesn't. So my challenge in trading is around my full-time job hours. But again, having a full-time job does make it slightly more challenging, but it does give you an advantage because you have a steady income. And that takes away some of that early pressure of you having to make money, which is a good thing. The thing is when you can get a day off is probably practice all through the day to work out what time you is best for you, and then try and manipulate or maneuver your working hours around that if it's possible. So if you lose connectivity and have a stop loss, are you covered correctly? That's going to depend on your software that you're using. Many of them, those orders will stay in the market. But of course, if you've got stop losses in there, any orders that you have in there where you're trying to work to get into a position will be in there also. So the important thing is just get onto your broker as soon as possible. How do you feel about a break-even strategy when day trading? I don't like break-even. In a trade, that is. I would rather lose 2 or 3 ticks rather than get out for nothing. And that's obviously just my personal view. And the reason for that is because if I've traded at a level, it proves that it is a tradable level. And the markets are great at retesting. they're great at coming back and testing to the same levels again. So if you've got that break-even trade in there, you've raised your stop loss up, you're going to regret that probably more often than you wouldn't. So I would rather see the market go 2, 3, 5 pips against me and then stop myself out than take those break-even trades, because over time I know that that would be the right way for me personally to activate that. Is there any trading course that you'd recommend? Of course, my ones. So I've got loads of different ones. I can customize them around you. So again, if you look on my website, you can feel free to contact me. Then what I always do is I always have a conversation with anybody that's looking for a course. I don't just book people for courses. I want to find out their background, their motives, why they want to trade, what experience they have, what they're looking as their end goal, and what their asset class is as well, because again, that's very important. I'm fortunate that I've traded all the different asset classes. Is it best to trade overnight at the beginning? Definitely not. Keep your risk on a day basis. Weekends and overnights can be extremely dangerous, especially as you're going into Asian hours. In Asian hours, the markets become quite thin and you can have some aggressive moves. If you look at the stock market, you look at gold, a lot of the big moves happen actually in Asian hours when the markets are very thin. So that's something to be very cautious of. How can you raise your stop loss or target on the Super Dom? Is it scrolling action? If you've got any technical questions, I think I'd prefer you to actually go to Ninja Trader and ask them directly, because I would hate to give you any wrong advice there. Hi Chris, how do the money management for day trading? So again, it depends how frequently you're going to trade. So for me, it's different and it's different for everybody, but you've got to work on the amount of capital that you have to work with, and then work out how many days of a week or a month you're going to trade, and then break that down. I would say an important thing there is to probably try and keep that consistent. And if you're having a good run, don't suddenly start to push up those numbers and go, oh, instead of losing, say, 100 today, I can lose 300 or 500. Just bank it and bank it until you get more experience. And then as you get more experience, hopefully your account's growing to match that as it should. And then every so often you can start to consider whether you should increase your limits. But 3, 6 months or even a year before you consider doing that each time. Do you cover in one of your courses scalp trading? I do, but to be honest with you, most of the time I try and push people away from scalp trading. We call it picking up pennies in front of a steamroller. You'll take little profits, and then when the market goes against you, suddenly it's not a scalp anymore. Now what you're actually doing is you've got a trading position, and then you tend to run that, and you'll find that when you finally stop yourself out of that trade, you've wiped out everything you've made and possibly more from all your little small scalping trades. So it's okay. It's good to practice on the sim, to understand it, but it's not something that I would advocate in trading, especially if you've got a long-term goal of becoming a professional trader. Are there times of the year that trading is wonderful, e.g. elections, Christmas, New Year's? Every day is wonderful in trading. I mean, I wake up in the morning, go to bed at night, dreaming, sleeping, just can't wait to trade. Of course, just waiting for the right opportunities, that is, not rushing in, of course. But yeah, elections are good. Any big data. But again, trading data, you've got to be cautious of trading data. If you haven't got that experience, it takes a very, very special mindset and exceedingly fast reactions and analysis to be able to do that. especially these days, because you're up against a lot of algos and things like that, to these automated systems. And again, that's why you just see the markets react so fast when this data comes out. Christmas is a time to be more careful because the markets thin out. Summertime can be a little bit more cautious as well because the markets, the volume drops off a little bit generally. I'm not so sure it's going to do that this year because we've got the elections, we've still got C19 going on. And of course, you know, with that, so first 6 months of the year with the COVID situation, the markets were very, very volatile. You saw the markets collapse, especially the stock market, and then bounce and recover fully. And of course, again, it's important to understand the fundamentals of why that would be, because if you look at companies, they're not necessarily reporting massive earnings, only in certain sectors, not right across the board for sure. And yet we're seeing all these very high stock prices again. And that's more to do with the central banks and the governments with their fiscal and monetary policies. Is volatility a trader's friend then, or is volume? Actually, I've got something I call the 3 V's, which is volume versus volatility. So what I do is, as the market becomes more volatile, I actually reduce my volume down. And that's so that I can allow the market to go further against me, but without increasing my risk or potential loss. So I just go in with smaller size to compensate. And that works very well. And that's something that I definitely advocate. You know, it's easy to see the volatility in the market as well, because when you're looking at the candles, for example, you can just put them on 1 minute, 5 minute, 1 day, and you can look at those and you can assess how volatile the market's been recently. And then that helps you to gauge, you know, what size you should go in. Of course, there's always that sudden change of momentum, that change of pace coming in because something's happened. But you know, just be aware all the time of that. But for me, yeah, I always reduce my volume when the volatility gets higher, or I'll trade options because I quite enjoy that as well, because that can give you that little bit more control over your risk. Is it good to trade prior to companies' earnings? I don't think it's good to trade before any big data is coming out. Personally, I think that's gambling, not trading. Trading after it's come out, if you're fast enough, definitely. But you know, again, if you're fast enough and if you're inclined to trade that close after data. Otherwise, you know, if you're technically orientated, you can just take a step back and just wait till it comes to a new level and then perhaps get involved. But you know, just don't rush into all of this. Have you ever made a trading decision on gut feeling? Yes, plenty. So quite often what I'll do there is my technicals may be telling me something, but my gut's telling me something else, and I trust my gut much more. Trust me, I love technicals, I love fundamentals, but I really believe in my gut. But my gut is got 40 odd years of trading experience, so that's why I follow that. So if something doesn't feel right to me, I won't take the trade on. I know that there's always going to be another trade around the corner. It doesn't matter how long I wait for it, it's going to be there. Indicators, I've got my own trade setups, I've got my own trading signals, so I only use 1 or 2. An RSI can be useful in volatile markets, or a MACD. The MACD I actually like with the histogram, so it actually shows you the little vertical bars so you can see the difference between the moving averages. And again, I find that quite useful. But I'm very much orientated just on pure charts rather than multiple indicators to go with them. In the euro, how do you pay with American money? I take PayPal, I Bitcoin, whatever anyone wants to throw at me. If it's money, I'll have it. Same as in trading. So I'm sure if you just contact me somehow, we can discuss those things. How do you feel about Renko charts? Well, I always think of Renko as a modern day point and figure. I don't know if you guys are familiar with point and figure, the noughts and crosses, but that is actually one of my favorite charts, and it's one of the oldest charts. And the thing I like about it, I find it very visual, and I think it's easy to identify where support and resistance is. But again, you know, anything new is going to take a lot of practice. It's something you're going to have to really work at to try and understand. And, you know, I'm happy for you guys to contact me, to ask me questions like that, and I'll try and help you as much as possible. One of my favorite markets to trade, I trade gold, I trade oil. Oil, I trade more in the way of strategies, so calendar spreads, flies, condors, so strategies that are long short positions rather than just pure outrights. I'll trade options on oil as well, because I have very strong views quite often of where they're going, where I've been a market maker for so many years there. And dollar index, I love the dollar index. I love the euro against the dollar. I won't go into why and what I do with that. I don't want to influence you guys, so I'm just going to stop there. And S&P, the Dow Jones, I've been trading probably most of this week when I've had time to trade between my courses. Have you traded the futures, and do you think it's a good market? I always trade the futures. Futures and options are, for me, the best markets. Just, you know, you want that liquidity. You want to be trading against other traders. So all of that comes into consideration. You've got great functionality with NinjaTrader. And again, that is massively important for when you're trading. FTSE 100, not often. I always say to guys coming through, because a lot of people sort of get drawn towards that, I think FTSE 100 is quite a good product to trade around the first hour of it opening and around the last hour when it's closing. I think in between it can be a little bit thin and therefore a little bit dangerous. What's your thoughts on mini versus micros for beginners? I think always start with the micros. If you've got that opportunity, it's all about learning the processes and managing the money, managing your emotions. And it doesn't matter how much you're making and losing on a trade. It's about going through those processes, understanding how the markets operate and gaining that experience. There's, you know, when you feel comfortable, you can always take that step up. Whereas if you take that step up too early, you can regret it and you wish you'd gone the other way. But sometimes that can be a little bit too late for you. On tape, it has to be online. If you're in the UK, I do some face-to-face courses, and I can adjust times. That's not really a problem for me. Otherwise, of course, most of it's going to be online. I do get people travel over to meet with me personally and take courses in London. But again, that's entirely up to the individuals, and I'm happy to discuss that with people as and when. What are your thoughts of minis? Yes, I've done that one. Have to trade FTSE futures. So where are we now? So, okay, guys. So I think we're going to probably just wrap up about there, unless you want to throw any final questions to me. I'm sorry if I've missed some of them. So if I have, if you want to quickly chuck one back to me now, I'll answer it very quickly for you. Just a lot of them flew in very quickly at the beginning. Thank you very much for all the kind comments. It's really nice of you. And, you know, I'm always available. So, I mean, reach out to me. I'm on LinkedIn. However you can contact me, just go for it. And I will try and help as many of you as possible. It's just in my nature to help people anyway. So being able to do trading, teach trading and help people is just perfect for me. It's just the way I like things. Yes, I did trade in the live pits. I've traded in all the live pits. I've actually still got my jacket, which if you want to, I can send you a picture of it if you email me or something. So yeah, it's I traded in a room. I've traded in pits. I've traded any and every way you can imagine. Obviously, with what I've covered is the basics, because we've only got 30 minutes. You know, there is so much more to trading, so much more to setting those rules to keep you safe. So, you know, again, reach out, feel free to do that and get as much information as possible. Be wary of listening to too many different people on websites, YouTubes and all that. Try and find one or two that you can relate to, because otherwise quite often you're going to get conflicting insights, which is something that you don't want to be doing, because that's just going to sort of, again, just mess you up. It's just going to confuse you. So there you want to be really careful.
Okay, thank you so much.
You're welcome, and thank everybody for attending. So have you turned it off, or is everybody still there now?
Everybody's still here. I'm just
Okay,
going to give a special thank you to you, Chris of Master Consulting, for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event, so just keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. So if you find value in these events, we hope you will attend them on a regular basis. We would like to remind you the information provided in this was of Master Consulting and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day and hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem. And again, thank you so much, Chris.
Bye, guys. Thank you very much.